Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Thursday, August 23rd, 2007. The market's closed, and we had a little bit of a pullback today. Not much really to speak of. The S&P 500 was down 18 cents, or 0.12%. You can see that the spiders did close above that 200-day moving average for the second day in a row after spending 8 days underneath it. And today we saw a little bit of increase in volume. And I only mention it because I've been mentioning the fact that we've been up on declining volume the last 3 or 4 sessions. But today we saw a little bit of a pullback and slight increase in volume. I don't think the volume really can tell us much today. But again, this market is getting extended to the upside. It is still showing this series of lower highs and the lower lows. So we've got a declining 50-day moving average on the daily time frame, which tells us we have to still be very careful. And you have to wonder if this rally is going to turn out to be like the last one, which is characteristic of a lot of rallies in a primary downtrend, which is what we have to look at again because we've got that declining 50-day moving average. The burden of proof remains on the buyers here. And what we had said last rally was that in a declining environment, the rallies tend to be very fast, and they tend not to hold. So there aren't any signs that the market is deteriorating or failing yet, but we have to be on the alert for them because short and intermediate term, we still have a healthy uptrend here. And we're turning more sideways now actually on the short term. But the intermediate term trend, again represented by the 5-day moving average, is still rising in here. And you can see the market's been above that for the last 6 days, and it continues to hold above there. So that's a very positive sign for the intermediate term. I think that breaking below that 5-day moving average and near this 145.25 area tomorrow could put us off to a tough start for next week. But again, right now, we've got a healthy market here in the intermediate term, but the larger term time frame says that we've got to be very careful. So again, it's just mixed messages here from the market. This level here, the 148.5 or so, is about where you might expect to see a little bit of resistance from the prior support in this area. So really not much to go on here except for the short-term time frames, and that's where you've got to focus your actions, I think. But even looking at a 2-minute chart here, you can see that the last 2 days, it's been really kind of back and forth, kind of choppy, and that's starting to show up on this 10-minute time frame where we're not really making the progress anymore. So again, you've got to just be very suspicious of the action in here right now. And below that 145.25, again, we've got 144 that looks like it might be a potential support area. And then just below that, about 143.20 or so. Those are going to be the levels of potential support. And again, I pointed this inverted head and shoulders out, and this measures up to a target of 152, 153, I believe. But even though it's hard for me to believe, you can't force your opinions on the market. You have to listen to the message of the market. The message of the market is we've had a good rally here the last 6 days. Now it looks like it's starting to go sideways. Is this distribution before it fails? It's too early to tell because of that rising 5-day moving average. So let's take a look at the semiconductors. Again, the semis, after bouncing from that 200-day moving average here, we're looking for a move up to 37, 37.5. It's still finding resistance up near that 37.5 level. So hasn't been able to make it back above that area yet. That looks like it's maybe a reason for concern. It hasn't broken down yet, although we did see a lower low today, and this might be the lower high as well. So I think it's going to be important for the semiconductors to get back above 37.30 or so. We do have a rising 5-day moving average, so the odds don't favor an immediate breakdown. But I would be very defensive on a move below the low today. So I think below 38.85, you've got to get very careful. And if you have profits in these stocks because you've purchased them over the last few days, then I think that you probably want to take some action to protect those profits in here. This market continues to be in a primary downtrend on the daily time frame, and this very important level of support from earlier in the month looks like it might be acting as resistance in this area now. So just again, be very careful. The IWM, the Russell 2000, percentage-wise lost a lot more. It was down $1 or 1.24%. You can see it opened up right near that 200-day moving average once again. So there's definitely sellers at the 200-day moving average in the IWM. We saw the volume come back down. I'm sorry, the volume rise today on this decline, and it put it in an outside day down, meaning today's high was higher than yesterday's high, today's low was lower than yesterday's low, and it closed near the low end of the range. Not a good sign typically, and finding the resistance at the 200-day moving average where we might have expected it to is again not a good sign too. The 80-20 level is the area that where that resistance is. It's really going to need to get above $80.20 for the buyers to take control and hold on to control. Somewhat encouraging is, again, this 5-day moving average is advancing. So, again, just more mixed signals. I think I'm going to take tomorrow off. This type of trading environment usually equates to a lot of commissions and not much progress being done in an account, at least for me. Unless you can really find a stock that's just completely isolated that you can get a good position in and trade it, trade the individual stock itself. The NASDAQ 100 has had four very nice up days, and today it came into a little bit of selling. It was only down 13 cents, about 1/4%. It is below the 50-day moving average, but it is bullishly holding above the 47 level. So the 47 level is an area that we had been focusing on as support back in here. Hopefully it continues to hold as support, and maybe this market can heal and turn itself around. The 50-day moving average is more neutral than anything, so we can't really read too much into that. But with a declining 10 and 20-day moving average, you got to be suspicious of this market overall. Let's look at the 30-minute time frame. You can see that the market has had this very nice rally in here, and maybe we could take a look at the trend line. You could draw a trend line. You might be tempted to draw a trend line off these lows, but when you have a sharp turnaround like this, what you want to do is draw a trend line that captures the essence of a trend. And basically, I think drawing it off these lows is the important level that we should be looking at as far as a trend line goes. We did see lower lows today, and if the market can't make it back above the 47.60 level, then we might have a lower high in place. But we've got a rising 5-day moving average. Very mixed picture in here. Again, I think I'm taking tomorrow off.